Hey everyone, it's Matt with EquiPredict.com. Thanks so much for watching. In this video, we're going to take a dive into the analysis and examination of the SOXL ETF. That's a triple leverage semiconductor ETF. We're going to be using SOXX as a proxy for the analysis of SOXL, and we'll kind of talk about why. And again, if you're enjoying some of the content we're providing, please do feel free to subscribe to the channel. Also, you can head over to our website, EquiPredict.com. We've got a lot of information over there regarding market forecasting, and we do send out to our readers an occasional EquiPredict alert. So that's over the website, EquiPredict.com. Up on the screen, I've just tossed up a photo here that, or I should say, image that's been created. I saw this somewhere on social media. I did not create this image, but I thought it was apropos for what happened on Friday. And I thought it was something I'd just share with you guys. Kind of think anyone who was a sort of in the near perma-bull camp for the stock market and as an active trader certainly felt some of the heat in this tail end of this week if you were not shorting or in cash. So the iShares Semiconductor ETF SOXX over the past 5 days, you're sitting on losses around 11%, and you can see why you got to be really careful using leverage. This is for SOXL, which is the three times leveraged semiconductor ETF. You're sitting on just over 32% loss over the past trading week. So got to be really careful with leverage. So just bear that in mind. And what we do is we take a look at, if you watch some of our other videos, for example, if we're looking at SQQQ, for example, we're using PSQ, the non-leveraged ETF, because of slippage. All right. If you're looking at the two charts, you can do this yourself. Line up the two charts next to each other for SOXL and SOXX. You're going to see that there's slippage in SOXL that you're not going to have in SOXX. So our advice and what we do for ourselves is we take our cues from the non-leveraged ETFs if we're going to be using leverage, and just something I'd recommend you try out yourself. So up on the screen here is actually a weekly chart for SOXX, and again, we're using it as a proxy for SOXL. You can actually see there's a couple things on the screen here that we'll point out. First of all, there's a static cycle, which is the yellow lines that I've drawn in here on the chart. And you can do this yourself. This cycle goes back. This is a very static cycle. It's around 26 weeks from trough to trough. It goes back, I only did it back to 2020. Some other folks here might want to do their own examination and check out the cycle. It might even go back further than 2020. So we're going on, 4 years now where this cycle's been in play. It doesn't work perfectly. I mean, and also we've overlaid here on this blue line for those who are watching. This is our EquiPredict model that we use to give us some guidance as a roadmap as to when we can expect to see, or we should be on the lookout. It's just an indicator. It just gives us a signal. It's not a trigger for entry. You just got to remember that. It gives us just sort of an indication of when we should be kind of on the lookout for some bearish action at the top of these peaks and the bullish action, bearish action up here. So I hope that kind of makes sense as to how that model works. And if everyone has watched you can watch some other videos. We just sent out to our readers over at EquiPredict a few weeks ago to take up a position in McDonald's, because the EquiPredict model and the static cycle model was in alignment, and sure enough, it has recently just taken off. So each indicator that you come across on the web, or someone like myself and our guys who have this model, it's simply an indicator. It's not perfect. You can see here that although it gave us sort of this indication to look for bullish action, this is during the bear market of 2022. If we had just obeyed just the static cycle and the EquiPredict model and gone long, maybe on a breakout here, okay, you go long and all of a sudden you're sitting on losses. But what you're going to see is that you would have come back up for a break even at that particular time, maybe 8 or 10 weeks later. So you always have to be careful with whatever indicator you're using, and we just again use the EquiPredict model as a guide. And so going into 2023, it really started to get in lockstep. You can see here just told us to start looking out for some bullish price action, because this is a predictive model. This is known well in advance, and you'll see this on the next screen on sort of what it's saying for 2024. It told us at this particular point to look for some bearish pressure, some selling pressure, if you will, or at least a watch and wait. I mean, during a bull market, the problem with the EquiPredict model is that during bull markets, it doesn't call tops, it calls bottoms in a spectacular way. But calling tops, I think that's just because of the way the market is designed. The market is designed to go up. So prices of various equities can continue to rise even during an EquiPredict peak like this. But nonetheless, you can see here that again, as you're into 2023, you take on a long position here, look for sort of a bearish or selling pressure at this point, and so on and so forth. So you can see here though that the static cycle called it perfectly. The problem again with using static cycles is that they are static, they don't move. You know, you can see here in 2022, if you had just obeyed just a cycle and said, okay, well, you know, going back to 2020, I can see this has been working for, you know, at least 2 years. You take a long position here, and again, you're sitting on losses, but you just have to ride it out, and you're going to get out for a break even, typically if these cycles work really well. So each one of these cycles, again, going back, have worked out perfectly. You've all done very well if you've taken your cues just from the cycles alone. So we're going to hop to kind of what's happening now. And you can actually see here that, again, the model, the EquiPredict model, as well as the static cycles, has worked very well. Again, not perfect on the EquiPredict model. Even the static cycles, in this particular case, were actually pretty good. You can see here that the EquiPredict model gave us an indication just before we curled into 2024 to go ahead and take up a position. And this is this is what I mean by sometimes it's difficult to call market tops, is that you would have likely, if you were just obeyed just the EquiPredict model alone and we had just gotten out, you probably would have gotten out here and then been kind of frustrated that it took off for the next 6 weeks. However, if you just simply are patient and wait for the model's next cycle low, you're going to see that it came down nearly perfectly right around here at the same time as a static cycle for a nice profit here. So again, you have to mind your stops no matter what indicator you use. You know, I believe this is a combination of some of the economic data that's rolling in, Fed policy, as well as some of the machines taking out stops for a next run up. So if we're looking at the model by itself, what it's telling us is that, yeah, we may see some bullish indication a little bit going up into September at this particular point. It's certainly possible, but the static cycle alone is actually telling us around 1028 that week. We start to see some bullish price action set in on the marketplace. The EquiPredict model is a little bit later, around, I think it's the week of 11/11. So just something you want to bear in mind is that at this particular time, it's best to kind of be watching and waiting, not necessarily using SOXL to the long side at this particular point. If you want to make a quick trade in and out, you might get actually a bounce back up until the beginning of September, and then another fall off. Just one thing to note about the model is that it does not provide an estimate of magnitude. It's just an estimate of time. So it's tied to the calendar, not to the price. I hope that makes sense in what I'm saying there. And so our EquiPredict model is saying that essentially that last week of October into November is when we can expect to see some genuine bullish price action set back into the semiconductor space. So if you want to take up a position in SOXL and you want to kind of sleep easy at night and not have to worry so much, I'd probably be waiting until sometime in October. So hope that helps. Happy trading and good luck.